welcome to The Explainer. Today, we're going to pull back the curtain on crypto trading. We're talking about a complex financial engine that, honestly, very few people even know exists, but it powers pretty much everything. So let's kick things off with a single number. Get this, 90%. Over 90% of all crypto options trading happens with a type of product that most people have never, ever heard of. Yeah, even folks deep in traditional finance might scratch their heads at this one. And here's the kicker. This isn't happening on the exchanges you might think of. We're talking about a massive amount of trading that flows through platforms where traditional money, like the US dollar, is basically forbidden. And that right there creates a really fascinating problem. So let's break down this dilemma. You've got traders who, for the most part, want to bet on Bitcoin's price in good old US dollars. But the exchanges where all the action is are crypto only. So how in the world do you solve that puzzle? How do you trade in dollars without any dollars? All right, let's really dig into this. Think about it. If your whole platform is built to steer clear of fiat currency, whether that's for regulatory reasons or, just for the crypto philosophy of it all, how can you possibly offer a product that's based on the most popular fiat pairing on the planet? Well, the market's answer was pretty ingenious, actually. Instead of forcing something that just wouldn't work, they just invented a whole new kind of option, one that takes the usual structure and completely flips it upside down. So here's the big idea. An inverse option lets you trade on the price of Bitcoin in dollars, right? But, and this is the key, your collateral, the money you put up and the money you get paid out, it's all in Bitcoin. The dollars are just a reference point. No actual US dollars ever touch the exchange. Okay, so if you look at this chart, you see the first few rows look pretty similar. But that last row, key risk, that's where everything changes. With an inverse option, you're not just betting on where the market's going. You've also got this whole other layer of risk. The value of the crypto you get paid in can change. And believe me, that matters a lot. And this is where things get, kind of weird. With one of these inverse options, if you bet the price is going to go up, a call option, your profit actually has a ceiling. It's capped. But if you bet the price is going to go down, a put option, your potential profit is theoretically infinite. It's totally backwards from what you'd normally expect. So you see, they solved one problem, the no dollar problem, but in doing so, they created a brand new headache. And this is especially true for traders who are still thinking in terms of traditional money. We're back to that hidden currency risk we mentioned earlier. Yeah, and this quote from the paper we're looking at just hits the nail on the head. Just picture this. You make a fantastic trade. It's a huge success, and you get this big payout in Bitcoin. Awesome, right? But while you're trying to move that Bitcoin over to another exchange to cash it out for dollars, the price of Bitcoin itself suddenly tanks. And just like that, poof, your amazing profit just evaporates into thin air. So naturally, this exact problem forced the market to evolve again. It led to the next big step in crypto derivatives, a new tool designed for one specific purpose, to kill that currency risk right at the moment you get paid. And that brings us to the quanto option. The easiest way to think about it is like this. It's a trade that has a built-in insurance policy for the exchange rate. Before the trade even starts, you and the other side agree on a locked-in, fixed exchange rate. Okay, so this process here shows just how brilliant the quanto inverse option really is. You get all the benefits of trading on a crypto-only exchange, just like a normal inverse option. But, and here's the magic, that currency risk is totally gone. Why? Because your final crypto payout gets converted to dollars at that rate you locked in right at the start. It's the best of both worlds. All right, so we've gone through some pretty complex stuff. You might be asking, why does any of this matter to me? Well, it's because these tools are way more than just fancy gadgets for traders. They actually tell us a fascinating story about the entire direction of the crypto market. And this right here, this is where you see the raw power of these things, especially in a crisis, a real black swan event. Let's take the big crash in March 2020. If you had a standard put option, a simple bet against the market, you would have made $5,500. Not bad. But with a quanto inverse put, thanks to its unique structure, that same bet would have paid out over $14,000. It's not just insurance, it's like insurance on steroids. So when you boil it all down, what are we looking at? These aren't just toys for speculators. They are bespoke, custom-built solutions to the very specific problems you find in a crypto-only world. What this really shows us is a market that's growing up fast. It's building its own sophisticated financial plumbing, completely separate from the traditional system. And that kind of leaves us with one big question to chew on, doesn't it? Is all of this incredible financial engineering the blueprint for a future, more adaptable global financial system? Or is it maybe a warning sign? A sign of a market that's building layer upon layer of complexity that could, one day, become a massive risk all on its own?